It is the 25th of February 2026, and today we're going to analyze the stock of Tesla. Remember, this is not financial advice, just my personal. Here we are on Tesla's profile page on investing.com, and look at valuations, price charts, things like that, bullish to bearish signals, things like that, and see where Tesla sits. Tesla, in case you don't know, car company, but so much more than just a car company, a data company, all kinds of stuff. Really sits in the consumer discretionary sector, but really could fall into technology, the tech, and all kinds of stuff. It's quite a range that Tesla fits in. Let's look at the numbers. So it sits currently at $409 in the past day, which would have been the 24th of October. 24th of February, not October, 2026. It had a gain of 2.3% in the past day, and its 52-week range goes from 214 to 498. So that's the 52-week range, low to high. So currently sitting at 409, kind of right in the middle there of its 52-week range. We're going to talk fair value a little bit later when we get to valuations and all of that, but you're kind of seeing what its fair value sits here with a potential downside based on fair value of 32%. Uncertainty around Tesla sits at a moderate level, so not high, but not low. High is where I would put a speculative stock if you follow my investments and recommendations around structuring a portfolio and such. So it's right at a moderate level. Let's look at the bearish to bullish signals. There's two bearish and two bullish signals. It holds more cash than debt on its balance sheet, which is really important. It's good to know that a company has the cash there to cover its debts and its obligations for the future. 5 analysts have reviewed their earnings upwards for the upcoming period. The two bearish signs is it's trading at a high earnings multiple, and it suffers from weak gross profit margins. So these are the two bearish signals. So there's not a lot of margin in its in its services, in what it sells. There's not a lot of profit margin there that it's working with, and it's at a high earnings multiple. We'll see more as we get into valuations. So let's look at the charts for the past week. It has basically remained flat. It's down 0.4%. Past month, it is down 5.9%. Past 3 months, it is again fairly flat for a 3-month period, down 2.3%. Past year, it is up 35%. Past 5 years, it is up 81%, and past 10 years, it is up a whopping 3,099%. So it's done well over the 5-year and 10-year time period, and even for the past year, that 35% is pretty good return for a year. So let's take a look at its valuations now. So valuations, its price to earnings ratio, it is sitting at 404.9 times. That is a massive price to earnings ratio considered to its peers at 27 and the sector at 11 times price to earnings. The PEG ratio, which is price to earnings to growth, right? So it's valuation or its price to earnings, and then considering its growth trajectory, its expected revenue, its expected growth in the future, it is at a negative 8.6. This is a strong sign of it being potentially, it's a strong sign of it being overvalued, and there's potential risk there. When the peers are at a 0.5 and the sector is at a 0.02. So 1, if it's sitting at 1, then this, say you read this reading, if it's sitting at 1, then it's basically right where it should be valued, and right where it should be valued, and for the future, its growth expectations. If it's over 1, overvalued. If it's under 1, undervalued, except for if it slips into the negative numbers. So if it goes into the negative numbers, then it's expecting that its growth is actually going to be negative compared to its valuation, if that makes sense. If you have questions, put in the comments below and we can dig through that more. But this is the lowest number I've seen in all the stocks I've reviewed, right, at a negative 8.6. Let's come down here and we can see the analysts target and fair value. Fair value puts us at a potential downside of 32%. Analysts' targets are an upside of 11.9%. Fair value just looks at numbers. Analysts looks at excuse me, I've been sick a little bit. Analysts looks at a whole lot more. So, is this stock for you? Well, I'll share my thoughts. Tesla has done well over the long term, as we saw there with the 10-year term over 3,000%, 3,099%. So it's done well over the long term. So if you're looking to invest